Patanjali Foods. They reported their Q4 numbers. The company's revenue surged by nearly 18%. EBITDA was up 13% and profits have gone up by nearly 76%. To discuss this, we have Sanjeev Asthana, CEO of Patanjali Foods, joining us on the show now. Thank you very much, Mr. Asthana, for joining in. This is Reema Tendulkar. So the first question is, we've seen a decline in edible oil prices from the highs. So to what extent have the prices declined? And therefore, what will be your margins that we could expect, at least in Q1, Q2, first half of the year, in the edible oil business?
So edible oil prices have declined, just tapered off. And I think there was a high inflation that we noticed in the edible oil prices. So that this decline, whether in terms of revenue or margin, would not have a large impact. As we've always maintained that our margin profile is between 2 and 4% on the edible oils. And this year we did higher than 4%. We did about 4.65%. So we're pretty confident of meeting the same objectives of keeping at a ballpark range of 4% and hopefully better than that.
Okay. So edible oil margins, 4+ percentage points, right?
That's right.
Mr. Asthana, good morning. Thank you for joining in. After what FY25 has been when it comes to margins and your revenue growth, what are the targets that you have set for FY26?
So our targets are, what we've often said, and there's no change in that we'd like the HPC business that we acquired, nearly 5 months now for 1st November. We'd like that to grow by 15% year on year. The food FMCG businesses, which is the portfolio of all the food, 4 major categories, we'd target for 8 to 10% growth in that. And in the edible oil segment, between 2 and 4%. So that pretty much is clearly the growth in the revenue terms and the volume terms as well. And we are pretty much on course to achieve that. This year, we did more than 6% of EBITDA on the overall basis. And the target is that we should do better than this next year.
And what about the revenue growth? You've outlined the margin aspirations, and they're pretty much unchanged from compared to what they were. You're maintaining the margin guidance. But for edible oils, food and FMCG, home and personal care, on the top line?
So top line, as I mentioned, on a blend of 15% for HPC, 10% for the food, and about between 2 and 3% for the edible oil. That's pretty much. So that should take overall business closer to compared to 35,000 crores. We should be somewhere close to 40,000 crores in top line this year, more than 40,000 crores.
Now, what about the foods business, Mr. Asthana? Are you expecting any improvement there? Because staples continue to struggle as a segment. And the foods revenue also in the fourth quarter was down almost, 16%. EBITDA was down around 7%. Do you see that trend improving? What is the current situation that you're witnessing on ground? We are almost a quarter, halfway through the first quarter already.
So 2 things happened. Just to explain a bit about last fiscal, that the challenge that the food business faced overall, multiple food companies have gone through that. So there's a high commodity price inflation had a big impact. So for example, the edible oil prices were very high. The price on the side of the wheat prices, we typically witnessed between 5 to 8% growth that we had. Likewise, on the rice prices and similarly sugar, etc. So that impacted both the margins as well as the consumer demand was a bit muted, especially in the urban centers. So this quarter, we are seeing largely, food inflation has tapered off. It's closer to 3.2% odd. We feel pretty confident of, both the sales and the margins to pick up. So as we are already witnessing that. So I think pretty much things are normalizing. So this year, we should come back pretty much on the food business on the same track.
By when do you think you will get to the non-oil revenue contribution up to 50%? You had earlier spoken it'll take about 3 to 4 years.
So right now, this year, as you can see that, because of the high edible oil prices, the percentage of the non-oil revenues came down to 25%. Broadly, the target is pretty much that in the next 3 years, we'd like this to be 50-50. HPC, we will see a first full year of operation. The food business, the lost sales that we had last year, we should pick up this year. Our biscuits and the Nutella category continues to grow. So we are pretty much on course that stated objective that of 50-50 revenue. We should pretty much reach that objective in next 3 to 4 years, that we pretty much stand committed to that. And 10% EBITDA margin on a consolidated basis for the entire company.
What about your market share for the edible oil business, Mr. Asthana? You earlier mentioned that it stood at around 10%. And does it still remain?
So edible oil margin business that we pretty much, in terms of the market share, as we had stated, that margin it has not gone down. We had a marginal dip in the palm oil volume this year, but that was owing to the high prices of the commodity side. That part is more or less sorted out as the prices have tapered off. So our market share of 10% that we currently have, we will continue to grow, but at a pace which is about 2 to 3% growth rate in volume that we see. That is not going to be diminished in any way. In fact, if at all, we should consolidate that further and should grow faster.
Is it possible to split your revenue growth in the oils business into volume and pricing? Just to get a sense?
Okay, so 70% business that we do is in palm oil.
Yes.
So out of the 25 lakh odd tons that we do, typically nearly 15 lakh tons would be palm oil. About 5.5 lakh tons is soya. Rest is sunflower is about 100,000 tons, and balance would be split between mustard, sesame, and whole range of pressed oils that we have at the premium end. So typically that would be the broad split in the edible oil side.
So any expansion plans for the palm oil business, Mr. Asthana, this year? Because you had mentioned that margins will continue to expand for that, and around about 45% of your planted area is under the prime high-yielding range. Have you planned any expansions for this business this year?
So big plans. I mean, we did 89,000 hectares as we speak. We've done the plantation already. This year we should do more than 40,000 hectares of additional plantation. So it's a huge pickup that we're expecting that we will have. And subsequent to that, our target is that we should be able to, build up further. So all the plantation that we've accelerated in last 2 years should start to fruit in next 2 years' time. So then we should see a big uptick in the growth plans that the company has on the oil palm plantation side. So both on the margin as well as on the revenue side, the domestic oil palm plantation business should start showing a substantial uptick.
So for this 40,000 hectares that you are planning, is everything already in place, or have you earmarked any capex or something of that sort?
So everything is, of course, in place. I mean, seedlings, nurseries, preparation at the farmer end, the work that we've done progressively over the years, all that is in place. And year after, we should do 100,000 hectares plus. On the capex side, as I've repeatedly mentioned, that we don't have any great need of capex other than the maintenance capex that we have. So pretty much about 150 odd crores that we spend. Give or take additional 25% either side. I don't expect this to go further. But 4 years down the line, when all this new plantation that we're doing, I think we will need a capex of about 800 to 1,000 crores. So that the free cash flows that what the company has, the cash that sits on our balance sheet that we currently have. So we are pretty confident of not going for any kind of borrowing for funding our capex.
All right, Mr. Asthana, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Patanjali Foods, 3 to 4 years later, looking for some capex, but confident that the cash flows and the balance sheet will be able to fund it by itself. We'll take a short break. The Nifty